AI is the future.
After all, why else did Wendy somehow shoehorn AI into their earnings report? There are 7 big tech companies that have truly capitalized and have led the charge in this new AI boom, known as the Magnificent 7. So that's why I'm shorting them. Okay, please don't click off. I'm not a generic finance YouTuber who predicts a crash every week to scare people into watching my videos. I will try to stay unbiased and provide both a bull and bear case. Stick around, I really think you'll find it interesting. We've recently entered a new bull market after the horrible year of 2022. However, this performance isn't really what it seems to be. In reality, if you took out the Magnificent 7 from the S&P, the market would pretty much be flat. What's going on? These tech giants, including the household names of Apple, Microsoft, Meta, Amazon, Nvidia, Tesla, and Google, have been carrying the torch and driving the market gains while other stocks seem to be lagging behind. It's a fascinating phenomenon with potential implications for the future. So let's dive right into it. Over the past few years, the big 7 companies have solidified their dominance in the tech industry and the stock market. Compared to the other 5, Tesla and Nvidia are relatively newer in their prominence, but we include them anyway since they are huge tech companies that rallied. After all, there's another group of stocks for the established names, FANG. Their products, services, and innovations have revolutionized the way we live, work, and connect with each other. As a result, investors have flocked to these companies, recognizing the potential for growth and long-term profitability. This potential has mostly been realized. After all, if you asked a 12-year-old what stocks you should invest in, I guarantee it'd be one of those 7 stocks, or GameStop. Since these big tech stocks have had huge rallies in the past decade, many consider them insanely overvalued. If the company of Apple was its own country, it would be the 7th richest in the world. If that isn't overvalued, I don't know what is. This is why big tech hurt especially bad in the 2022 crash. The recent rally in the big 7 can be attributed to various factors. Don't worry, we'll address the elephant in the room eventually. Firstly, these companies have had strong fundamentals with robust revenue streams, solid balance sheets, and visionary leadership. This stability provides investors with a sense of security amidst market uncertainties, which is why permabulls were dumping their money into it in the middle of the recession last year. Stocks rebound sharply after a crash. Just look at QQQ, which is where the Magnificent 7 stocks are most concentrated. The year after the dot-com crash of 2000, QQQ went up 40%. The year after the Great Recession in 2008, QQQ went up 50%. The year after the COVID crash, QQQ went up 100%. So of course the year after the Great Inflation Crisis in 2022, tech stocks would have done great. However, this is accelerated by another situation, the emergence of, drumroll please, artificial intelligence. AI has existed for a really long time, but it only got good recently. This newfound AI boom was spearheaded by
ChatGPT, dude.
I am not denying AI's impact on the world. I mean, it hasn't even been a year ever since ChatGPT came out, and our world has already shifted massively. I'm really excited about AI, and I'm sure the world in 20 years will be extremely different from the one today, and for the better. However, the reason I'm so bearish on AI stocks, at least for the next couple of months, is one simple thing. This situation is pretty much in parallel with something that happened 20 years ago, the internet bubble. The internet has obviously been insanely powerful and has transformed the way we live. While the internet did exist for a long time before the dot-com crash, it really only got good in the late 90s. So every company tried to shoehorn the internet into their business model and the market rallied in a big way. Does that sound familiar? However, what comes up must come down. So QQQ just casually crashed 80%. That's just crazy. An index fund went down 80%. It would not recover until 15 years later. Imagine that. You invest in an index fund that's supposed to be one of the most stable investments, and yet you're in the red for 15 whole years. Even though the internet was monumental at the time, stocks that capitalized off the internet got absolutely pummeled. 2009 to 2021 was the biggest bull run in history, even though I was a bull during the second half of 2022. Looking back, I'm really surprised it didn't crash harder. In fact, the S&P was only down like 19%. I'm sure that if ChatGPT didn't come out in November, we would still be in a bear market. The market still has quite a ways to go down, but the hype is being sustained by AI, artificially creating the illusion of reversal. Once this facade is shattered, then it'll be violent. However, let's rewind to what I just said. Once this facade is shattered, then it'll be violent. The facade will be shattered, I know that for a fact. However, it could be like 5 years before it is. The market can stay irrational longer than you can stay solvent. Does Nvidia deserve to be a $1 trillion company when it only makes $5 billion of revenue? Probably not. So Nvidia's overvalued, right? Yes. So Nvidia will crash, right? Not exactly. Hype is a powerful tool. It's why the first half of 2023 was so amazing for stocks, and it could very well last for years and years. FOMO is a really powerful phenomenon. This could last for years until the bubble pops, but until then, even though everything says that your shorts are justified, it could be blood green. What would I do? Well, I would just stay away from these stocks entirely. I would try to delve into the world of small caps and value stocks, which are due to outperform in the 2020s like they always have historically. This is why the Nasdaq 100 actually rebalanced to give less weight to the Magnificent 7 and help the index be less top-heavy. At the time of scripting in mid-August, Magnificent 7 stocks are around 5 to 10% down from the highs a couple of weeks ago. Looks like we're seeing a reversal, and sentiment right now is very bearish. Do with that information what you will. Recent rally in the big 7 companies has had a profound impact on the market. Dominance, fueled by strong fundamentals and innovative products capitalizing on the emerging AI space, have rewarded investors who place these trucks in these tech giants. However, this phenomenon is dangerous and could potentially lead the way up to a horrific crash in tech stocks. Or the market could rally for another 10 years, no one knows. It's important to remain vigilant and not overlook other investment opportunities beyond the big 7. Diversification and a forward-thinking approach are essential for long-term success in the ever-changing world of finance. That's it for today's video. I hope you found this video informative or at least entertaining. Please like, comment, and subscribe to boost this video in the cool YouTube algorithm. We have free stocks for you in the description, and as always, I wish you green in your portfolios, and I'll see you in the next one.